Hello, everyone. Good morning. Happy Tuesday. Let me know if everything's working okay. I had to reset up a bunch of stuff with the streaming software. So let me know if everything's coming through and the audio is good. I'm just glancing around to make sure it still looks okay. All right. Hope everyone is doing well today. Good morning, Patrick. Good morning, Christoph. Let's see here. Let's see. We have retail sales coming out this morning. Coming in weaker than a forecast for the core retail sales, coming in at 0.2 versus 0.3 and lower from prior. The retail control was the only thing that beat. The retail sales month over month coming in weaker too. We just had Redbook coming in a little better than last week, but still below zero. So still in contraction. In 9 minutes at 8:15, we have capacity utilization and industrial production. Then we have business inventories at 9 a.m. Central, so those 30 minutes after the cash open. Good morning, Richard. Good morning, Sterling. And we have Barr speaking. Let me just see what else we have. We can look at this one. It's a little easier. We got Gibson speaking, Barr speaking. We have the NAHB Housing Market Index. We already talked about let's see. That's really about it today. But the big thing was the retail sales coming in a little softer. We had some key earnings this morning at Bank of America coming out there. They had some mixed banks earnings this morning. Over Bank of America looking for a slight gap up now. Lockheed Martin was a beat, and that is gapping up. Let's see what else we have. I did not see what's going on with Accenture, but that's pulling back. Nvidia still trying to push higher. So far, healthcare, energy, industrials leading, consumer cyclical and comm services pulling back. So we might be a risk off day. Would not be surprised to see at least some kind of choppy pullback action today. Let's see, we're at 97% for the rate hike in 8 days, 4 hours. So pretty much baked in. Nothing's really changed on that front. Fear and greed. We're still in extreme greed. So there you go. In terms of gamma, remember 4,500 is key. We're trading 4,550 right now, slightly in positive gamma. Gamma flip is 4,523. So if we head back down over the next couple days to test that 4,500 area, we will dip possibly into slightly negative gamma, but remember that 4,500 is where there's a huge call wall. So that is going to be a very key level. As I talked about with earnings, we got Bank of America, Schwab, Morgan Stanley, Lockheed. After the close, we got Interactive Brokers and Western Alliance Bank Corp, but that's really it. Tomorrow we got Goldman Sachs, Halliburton, ASML. So, and then we can roll into Tesla and Netflix. So tomorrow afternoon could get really interesting. Also, all right, good morning, PMG. Audio really good. All is just fine. Thank you for that feedback. All right, still have Lockheed Martin up. Looks like if we do keep above this 470-390 area, we're into a clear path move, and the key breakdown zone is right at the 62.5, so that'll be interesting. 482.45 for anybody who's looking at Lockheed Martin. What else do we have? Do we have any potential pullback patterns? This is a potential double top. It's in the way of the 4-hour rotation zone, and it's right in front of the daily rotation zone, so it's a lower probability one. But that would be 45.28.50 on a 4-hour closing basis to trigger, which is right about where the gamma flip area is into negative gamma. So that is a very key support area overall. On the support side, I'd be really watching that 45.28 to 45.30 area. If it were to trigger 45.12, 45.04, and 44.96. To the upside, we're still 45.75, 45.75, and then we got 46.21 to 46.45. So those are the key things to the upside. Again, the major support is right around that 4,500. Technically about 4,495 to about 4,500. Good morning, Jacob. For educational purposes, would you trade FSR as triggered daily double bottom or confirmed weekly? Remind me after I get through this again to look up FSR. NASDAQ also has a potential double top pattern. Would need the 4-hour close below 15,661.50. Targets would be 15,663.75, 15,514.75, 15,465.75. What does that look like on the daily into the daily rotation zone? So again, slightly lower probability. We're within shooting distance of that 87.5 though. So even if we pull back, I'll be watching for another rotation back up. We've got daily cycles also at the top. We have waning momentum, but it'll be interesting to see on the rollover move if it's enough to take out. If it's even enough to pull back and take out the bottom of the rotation zone. All the pullbacks recently have been rotation zone pullbacks. You see, since we really broke out at the end of April, rotation zone dip, rotation zone riding it, rotation zone dip into the rotation zone reversal back up, rotation zone reversal back up. So anything in those rotation zones until the trend does end could be a potential buy the dip scenario. And we had that sideways correction and then the breakout on the weekly. Now, one of these days, we're going to get something to end the trend and we're going to get that bigger pullback. But until that happens, nothing in sight yet. By the way, the Dow, we had the potential double turning into a triple. So there's no potential double in the Dow. All right. The major support area, though, right now on any pullback, we're trading in a minor support area. The major support area is coming in right around 34,625 to 34,600. Other than that, not much has changed really with the Dow. Russell, it's a 1, 2, 3. It's a multi-top pattern, so key support in the Russell back at 1939. The 87.5 minor, this is the minor 87.5 is 1977, 1978, so I'd watch for that to be an upside target. The VIX still 1362. No fear in the market just yet. Nothing in terms of fear. Nothing going on with the DAX. Still watching for a potentially higher push back up in the DAX, but there's no fantastic patterns. The notes, we have this really sloppy pattern here that still technically qualifies. So that's the only thing. If we got to close a 112.13 on a 4-hour basis, I'd start watching for rising 10-year rates and a pullback in the notes. Other than that, that is about it. Is there any fantastic bullish pattern? No, you're against very strong resistance in the 200. So not much on the bullish case just yet on the notes. The 10-2s breaking back down after hitting the first target. And yeah, this is a very sloppy double. So now I'm just going to map this out to see if we get the backfill pullback. Other than that, the double bottom is still invalidated, but now, yeah, we have mixed signals there. Dollar index, we have a little mini potential double bottom. Again, against the daily rotation zone, I'd need a daily close above 99.73, and that would only be for a short-term bounce play. Not even take it back to the major breakdown levels. That's the only thing I'm keeping an eye against, just in front of the next major harmonic lower. That's where that sits. Crude pullback, little steeper pullback than I was looking for, but I'm going to be watching for, especially when the cycles bottoming over the next couple days for another rotation back up to retest that 200 area. Other than that, it would just be a short-term break back above 75. If it does dip lower to major support level 72.50. Gold, remember hitting the first target, pulling back for the first cross rotation zone, now rotating up, hitting the second target. Final target 1985. So gold still in short-term bullish mode with the triggered patterns. We got the yen trying to get into little short-term double bottom territory, which it has. So that is, we've got that little bounce. Now we got that pullback. That's the only thing that's the more bullish sign potentially for the yen. Okay, that's where that sits. That's where that sits, again, against the daily rotation zone. But that could potentially take it back. If it actually could trigger and it gets a steam on with the rising dollar, the key level would be 141.15, 141.20, which is also right around the 50% pullback from the highs at the end of June to these most recent mid-July lows. So that would be a very strong resistance level. Euro, not a fantastic topping pattern. I am watching the 112. 112, if we start getting below 112, watching for a pullback, but this is a really tight pullback trade from my perspective because we'd be running into the daily rotation zone, but the first target would be about 111.65 to 111.50. So not a fantastic topping pattern just there yet. The pound, did the pound, I didn't look at it. I was trying to get the live stream. Yes, it did. It did. So that's the only thing that could trigger the bigger pullback in the pound. But again, against the daily rotation zone. So anywhere in that rotation zone, we'd have to watch for a bounce play. The first target would be roughly about 130.13. Bitcoin, still nothing. I know we didn't even cover it yesterday. Unless we really start breaking back below the 50, then I'll pay attention into this clear path move. Other than that, has not been able to break out. Now, cycle's getting to the bottom. We're getting it really near key support. So we'll be watching if that support holds for another bounce up to a potential retest of the higher area. Yeah, we got the US dollar, Japanese yen, and cocoa's still going for 20K in the NASDAQ. 20K. Spiders. Again, we found the resistance against, even yesterday, again against the key harmonic. Slight gap down today, so first thing would be for the gap fill if we get any buying pressure coming at the open to 450.84. Other than that, the support area is roughly about 447.50 to 447. Below that, there's still a gap fill left behind to 446.02. So those are all the key levels I'd use to the downside. And then 444 is a major support into the daily rotation zone. We break out. We don't even have a major pausing area yet. But using the minor pausing area, that's all we have for now. 453.88 and 456.40. For the NASDAQ, gap down looks like today. So 382.61 would be for the gap fill. And then remember the major key target is 389.40. 389.40 to complete the 87.5 rule using the minor harmonic pause area. And look at that. Look at that. 386 would be the next upside target beyond the gap fill. And then it just reinforces that 389.40 area. Pullback levels, there is still a minor gap fill back to 379.07, and then it would be 376, and then we'd be looking at about 372. So those are all the key targets there. Tesla, No, this is not a little mini potential double top. Anything on Tesla would be for the gap fill. And remember, Tesla earnings are tomorrow afternoon, then 281.23 if it does pull back bigger. But there's no fantastic pattern going into earnings. Besides, we got a waning momentum, divergences with cycles getting a top area. So if Tesla is going to miss earnings, the risk is definitely to the downside after reconnecting with the 87.5. All right, what did you want? You wanted, where is Sterling? FSR. FSR. What do you would you trade it as a triggered daily double bottom or a confirmed weekly double bottom, and why? Let me look at the charts. It's definitely a confirmed weekly double bottom and triggered weekly double bottom. So let's just see if what the targets. Let me just measure. I'm sure you're correct with all the measurements. Yep. I just got to double check. This is really sloppy, by the way, because of this. See, and this is you had a long consolidation area, and I actually wouldn't trade this as a double. And here's why. This looks fine. You can see it even on the weekly. But here's the problem. Here's the problem. You have this extended, you don't have a strong reversal area. The first target, I mean, if I was going to trade anything, I'd use this 810 as a first target area. And here's the real problem. You see this 866? And you got a pretty big reversal. You got all this sideways movement. So I would ratchet this down with a target area, at least for a stop raise, to be really aggressive, because this is super sloppy. You see all these reversals, and even on this daily, look, this, after hitting the 200, you had this big sideways move back up, testing that prior high in the 200. So 810 really is the first target, then 860 area. That's not a smooth double, though. So that's what I take into consideration. I would not give it a lot of room on a stop level also. But if this does dump below $6, it would be over for me personally, because then it's just going into a more choppy pattern. So that's the analysis with the daily and the weekly, Sterling. But again, it's ugly. So you got to really focus on those tightened up patterns. Or to tighten up levels. Gold didn't hit all the targets. It still's got one more to go. Sorry, that was crude. There's gold. It's still got one more to go. PEP. See? It's hit the first and second target. It still technically has a final target. So, that's where that sits. But this would be definitely aggressively raising a stop now at this point. Would not be giving back a bunch. You're welcome, Sterling. And also remember, we could get some interesting price action this week because it's July options expiration. And we are still in earnings season, but that July OpEx is pretty big. There's going to be a fair amount of gamma falling off. So it's going to be an interesting possible moves into Friday. So I am still prepared, unless we get a super strong or super weak tick, meaning a really trend day. I'm still prepared for potentially choppier price action unfolding this week, unless I see a super bullish tick with momentum bars to the upside, or I see a super bearish tick with momentum bars to the downside. But remember, if we get any super bearish price action, heading into that 4,500 area will probably be very major support. Just wanted to remind everybody of that. I think this live stream went okay then this morning from a technology point of view. So I hope everyone has a wonderful trading day. And by the way, NVIDIA still no topping pattern. No major topping pattern. If we do run up today, we'll watch for a little short-term potential double top forming. But that's very minor. All right, talk to everyone later. Have a wonderful trading day. Bye for now.